Can you keep up with the pace of market regulatory reform? MarketsReformWiki.com, the place to keep up.
How did Cortland get started in the Series Trust side of the business?
Series Trust is a registered mutual fund, umbrella fund that underneath that you can slot individual and discrete mutual funds that are started and managed by asset managers of all classes. The reason we actually entered into that field was our traditional customer base of hedge fund managers, commodity pool operators, and CTAs saw the increasing demand among the retail customers and institutions to a large extent for investments in non-correlated assets. Many of the asset managers that we were doing business with that had started hedge funds were looking for increasing their distribution channels into retail product lines and asked us if we could actually help them get into the mutual fund arena. So about 2 years ago, we started on the process to register our own Series Trust with the SEC, and now we have asset managers that have the ability to start and launch their own mutual fund relatively quickly, within 75 days, now that we have the Series Trust set up.
What's the structure of the Series Trust?
The Series is a registered trust with the state of Delaware. That's become the location now after Massachusetts and Maryland. Many of the hedge funds, or excuse me, mutual funds are actually registered in Maryland now. Once you have the Series Trust, which some people refer to as an umbrella trust, underneath that, then an asset manager can come to us with his strategy. Our counsel will write the prospectus for that individual, submit that to the SEC, and from the date of the registration period, starting the clock, within 75 days, the SEC will give you an effective date, and you can launch the fund. We'll have already ready for you a CUSIP number and a ticker symbol, so you'll be able to sell shares the very day of effective date.
What's the benefit for a CTA to use a Series Trust?
There's been a lot of demand recently for non-correlated assets among retail investors, but very few choices. You either actually open up a commodity trading account with an advisor or with a broker, or perhaps you might want to go into an ETF. The ETFs sometimes have limited exposure. They might be just an index or a single strategy, whereas inside the mutual fund structure, those futures traders can be trading a variety of different strategies, and it gives exposure not just to one element of the commodities industry, the futures industry, but rather a more balanced approach as opposed to just an index. A lot of retail investors would like to have a portion of their portfolios invested in non-correlated, and this gives them a perfect avenue to do that, and still within the structure of what they consider to be a very safe mutual fund structure that provides the type of things that they're traditionally looking for in a mutual fund: transparency as well as daily liquidity without any type of a lockup period, and daily pricing once a day, as opposed to many retail investors don't think that an ETF is a long-term investment. It's traded throughout the day, whereas typically mutual funds are more buy and hold, and so they can put a portion of their portfolio in the commodities area and still have all the benefits of a mutual fund.
How is this product distributed to users?
Unlike traditional hedge funds, you don't have to be an accredited investor. The minimums can be much lower. Those are established by the advisor to the fund. And virtually anybody that is a typical retail client or customer of mutual funds would be eligible to buy this. And it can be distributed through investment advisors, FINRA member broker-dealers, as well as on the platforms of many of the large clearing organizations.
How does the fee structure work?
You can maintain and negotiate your fees just as you would any other type of an arrangement. You'll be inside the investment structure of the mutual fund. You have to set up one more structure, which is called a blocker corp. Many times it's referred to that. And actually the advisor to the mutual fund will actually allocate the money into that blocker corp that then will be invested with various CTAs.
What kind of interest are you seeing?
With actually not a lot of exposure of our product, we're seeing a lot of interest level being referred to us by attorneys and other individuals that are influencers in that area. And so we've been quite pleased with the reaction we've got. I think that the futures channel is looking at this as a way really to reach out and cross that barrier to the investment advisors and broker dealers that have a lot of retail clients that have been looking for this type of product. And so we've been quite pleased. We think that there's the fastest growing area in the mutual fund area will indeed be futures investing in mutual funds.
What's the potential for this type of product?
We think the potential is really unlimited. Finally, delivering a product to retail investors that gives them an access into the futures industry without some of the associated risks that they've always had, been hesitant about getting into that arena. Now it's inside the mutual fund structure. We're also seeing the distribution capabilities being really broadened by the fact that as an investment advisor or broker dealer, all you have to have right now is a Series 6 or Series 7 license to be able to sell a mutual fund. And so it actually bridges that gap between the advisor and his client who's actually seeking the investments in a portion of their portfolio being invested in futures. It actually solves an issue for that investment advisor or registered rep that being able to access the strategies that their client are looking for inside that mutual fund structure. So we think there's going to be the demand. We think at this point in time is really unlimited.